Hello and welcome to the best and worst trades of the week. We are live streaming live from New York City with Rosalie, aka Crypto Queen, and also I'm Brandon, our head of research at Panoptic here in Salt Lake City, Utah. So welcome, Rosalie. Good morning to -5% prices in crypto. But yes, good morning. Nevertheless, how is your day going?
Good. Yeah, no, I think, the market moves up and down all the time. So I think it's fine. Yes, we're looking a little bit down today. The interns portfolio is looking a little bit down today, but I think that's okay. It's Friday. We'll see what's coming out over the weekend.
Thank goodness it's Friday. So
Yeah.
yeah, it's been a long week. I think we've seen interns portfolio fluctuate a lot, but you sound like you're very immune to the price shocks and undulations of the market. So it sounds like your spirits have not been tempered from the price drops here.
No, I think I'm here for a long time, and I've also been here for a long time, and I started at like all-time highs, and so I think you kind of become immune to it once you like just start losing money. But I think like specifically, every day looks different, so like never panic sell, never envy buy, and like you'll be fine. Like it's
Right. Once you're in the casino, if you never leave, you'll be okay. No, just kidding.
exactly.
But I agree. I think it is very frightening, maybe for if you're new to the space or new to trading, especially options. So a lot of it is risk management, which Guillaume preaches on this live stream all the time. And I think that's the one message to help you feel comfortable, because honestly, no one wants to have an upset stomach after they place a trade. Oh yeah, we'll move this. So yes, everyone wants to be able to sleep soundly, trade their Haposi Ainu Shiba without loss of sleep. So that's what we'll cover here. We'll go over some of the best and worst trades today. We'll also look at some interns trades to see how they're doing in this market turmoil, and give you some tips to sleep more soundly at night. But again, nothing we say here is financial advice, so please do your own research. Everything here is for educational and entertainment purposes. So hopefully we're entertaining enough today. Let's
Hopefully.
jump in.
Sounds good. Yeah, let me pull up the interns portfolio really quickly, and then we'll move to the best and worst trades for the week from our users. So yeah, overall, the portfolio, the total P&L is down 76. Funnily enough, I last week it was down $76, then it was up $76 the last time we checked, or 70. Now it's down again. So I think just kind of seeing these kind of familiar numbers and like understanding that this is about risk management, I am not really faced by this. Just like for options, just like for spot and options, I hold the same idea that you don't panic buy, panic sell, envy buy, envy sell, whatever it is. You got to let go of your emotions. If we look at our BTC ETH ratio trade, it's only down a little bit. I think if we have a bullish outlook on ETH here for a month, this is nothing to kind of panic about. Then we are still, collecting fees in our ticker Bitcoin position. We will be closing our Sol as soon as intern gets back from vacation, and then
Hurry
here
up, intern.
yeah, hurry up. We can look at the USDC ETH pool. I think here we had some bullish and some bearish strategies that we had set up to kind of protect ourselves. And so first we were really bullish, and then I wanted to kind of hedge that a little bit. So we have a little bit of wiggle room here from that hedge. If we include our deposits, which is one of my favorite features here, we see we're overall really bullish and might need to hedge a little bit more if we do kind of have a bearish mentality. But I think overall this position might be kind of losing us a lot more. But we are hedged, so it's important to look at your whole portfolio, and kind of just figure out what your goal is for the month and not, overreact. This has been open for 7 days. It's in range. We're earning some Streamia. We are making some profits from the recent price movement. And for the other two positions as well, our risk is minimized as well. I don't know, Brandon, if you have anything to ask or
No, this is a great analysis. Thanks for the update on the interest portfolio. I think what you mentioned about hedging is very important. It's important to be uncorrelated too these days. I know we don't hear that word very much in crypto because everything's correlated, including the ETH SOL pair. But if you jump real quick back to your overall portfolio so we can take a look, I think the ETH SOL position was doing quite well. And that's one of those very interesting pairs that the price of ETH in relation to SOL is generally, I would guess, is going to be less correlated than to the price of ETH to USDC or the price of Bitcoin to USDC. So basically, what you see with this ETH SOL price is you're tracking the relative outperformance of ETH to SOL or vice versa. And so this is a totally different market, and it looks like we're net zero there actually. So not bad, but overall,
this is the one that had gone out of range. So we'll have to open another one there. Did you want to look at just in general what the ratio is doing? We can
sure.
take a look. It's moved. This trade has moved against us, but here you can see where the price was when we minted it, and it's been going down a little bit.
Sweet. I had to move my face out of the way so that we could see that. But it does look like the the price ETH isn't doing so well. So ETH is down 5%. Let me check here. The Solana price is down 4.92%. So doing slightly better on the SOL side compared to ETH. But that's why this ETH price is down a bit more than SOL, if I'm understanding that correctly. So
for now, but I mean, things can change. I would recommend closing that position for sure, but sometimes it's okay to leave positions open for the time that you had previously anticipated. I think here we see this one was just previously at 93 the last minute ago, and so the things are changing quickly, so you don't want to make any sudden decisions. This one as well here, we have a pretty hefty spread. If you look at the premia here, we are paying for this put option, or we are not paying actually. Are we paying?
Yes, you're paying a lot.
We're paying now.
Well, I think it's out of range, so you're not paying. But if you go to the position info, we can take a look. If you see the net spread on the kind of that right over there, if you hover over there, net spread kind of tells you your effective spread. So even though one of the put options is basically costing 224% more than the Uniswap fees, we get that from taking the 3.24. You subtract 1 and multiply by 100. That gets you 224%. So you're paying a lot more for that put. But what are the Uniswap fees when there's an LP position that's out of range?
Zero.
There you go. So 0 times anything is 0. And so that one you're actually not paying for right now. So your net spread is effectively 1x. You're earning 1 times the Uniswap fees. So you're just earning the Uniswap fees with that short put leg, and you're not paying anything with the long put leg.
I think that's great. Yeah, as you can see here, it's approaching this range. So if the price does fall a little bit more, we will be starting to pay those fees. And those are quite hefty. So this might be a position that we want to manage. But again, our risks are capped here at a loss of 500, a little bit over 500. So I think it's probably not worth it to pay those extra fees. I would rather be earning those extra fees on Panoptic. But for now, at least we're still earning some Streamia.
Okay, well, very interesting. We've taken a look at some underperforming trades here. How about we jump to some of the best trades of the week? So we're gonna do a guessing game. This time, Rosalie will guess what the best and worst trades are. I have 4 trades prepared for you. 2 of them are the best trades. One being on Ethereum mainnet Ethereum options, and the other one is on base chain Ethereum options. So we kind of have 2 different markets. They're both ETH options, but on 2 different chains. And there's enough activity where it's kind of like different type of users. We get really big trades on Ethereum. We get the positions held longer versus on base. Gas fees are cheaper. People like to play around a bit more, put on smaller trades, do them more often. So we'll highlight the 2 best ETH option trades and the 2 worst. So we'll start with the best trades just because we've seen a lot of underperforming trades here. Let's jump to some outperforming trades. And maybe the title of this stream is misleading, so you may or may not want to use it as a hint here. But if you had to guess, you have put options, call options, buying them, selling them, or more complicated strategies. What do you think would be the best strategy of the week on Ethereum mainnet?
I mean, it was looking pretty bullish at first. Now the price has gone down a little bit. So depending on, it could have been either. I think maybe somebody made a gamble, and benefited from recent price action. Maybe like a long put.
Okay, that makes sense because it's bearish. So let's take a look if long put is the best trade, and I'll share my screen here. So this is the best trade. Not really even a bearish position, surprisingly, because the markets have been doing poorly. But this is where a straddle. So I'll go over the basics of this position. So this is what's called a straddle, or in LP terms, a delta neutral LP position. Very, very fun. So why is it delta neutral? Why is it an LP position? Well, basically, these are positions in Uniswap V3 between the price range of 25.81, 41.71. And the other LP position is between 33.61 and 54.32. So these are quite wide ranges. We call them 1 month straddles because they are so wide. They're likely to stay in range for about a month per some estimates. And this position started out when the price of ETH was 3,691, and it has since dropped, about, I would guess, what is this, like maybe 5% or something. It's dropped down to 3,622. So it started out almost delta neutral. It's now less delta neutral, but it has gained a lot in fees. So it's at a net 2.1% profit, and that is being buffered heavily by the amount of streaming premia that this position is earning. It's earning some nice Uniswap fees, and those Uniswap fees positions is hedged, which means that even though the price has dropped 5%, this position has gained 2% because of its hedging ability. So what are your initial thoughts on this trade, Rosalie?
I'm always excited to see when strangles are doing really well. So I think this is great. Harvesting volatility and earning fees is definitely a more safer thing, in my opinion, to do, since the price does fluctuate all the time. And so if you can harvest some volatility in the meantime, I think this is great. So I'm very happy to see that.
That's right. Yes, this is a volatility harvesting strategy, which means as the price moves, this thing collects money. But the key here is to hope that the price doesn't move too far in one direction and that it just moves around. This might sound familiar to you. If you LP, you want the price to move and come back and eventually end back up in range. But this is something you cannot do on Uniswap. You can only do this on Panoptic. You can hedge your LP positions. So as I mentioned, the price has dropped 5% in just one day. And so normally this position would be at a much higher loss, but because it started out hedged and is still slightly hedged, it has taken and absorbed those losses. It's basically taken on $100 of losses, but $250 in streaming premia, which means that if you net those together, it is overall earning $150 in overall gains. So very nice to see. The option sellers are indeed winning, and they are outperforming in this market where other people are losing. So this is a nice one to see. Any questions here? Or if not, we'll move on to the worst trade of the week.
Yeah, sure. I'd love to move on to the worst trade.
And speaking of which, what do you think is the worst trade of the week in the Ethereum options market?
Um, maybe, maybe, um, maybe a perp, maybe a long perp.
Long perp. Okay. Makes sense again. Long perp is bullish. I guess what is your reasoning for why you think it might be perp?
Because I think overall, like depending on the ranges that people chose, they could still kind of be profiting since the market didn't really move that much. It's just like one day. So maybe it's something that has more of that like one delta, and that is just a little bit more dependent on price movement. But we'll see. We'll see.
Okay. Well, very, very good answer. I'll share my screen here. And you were very close. In fact, you're halfway there. This is 1 out of 2 steps to create a perp. So a perp, by the way, is composed or can be composed of selling a put and buying a call. Here, I'll show you real quick on our trade page for the users new to this. Options and perps have this really cool connection. You can replicate perps. So, for example, right, we saw this short put. That is the worst trade right now. But if we add a call option, we get what is effectively a perp. This is a perp option. It has 3x leverage on Panoptic, 3.33333. It might have 10x leverage somewhere else or 20x leverage, but it's basically 2 options. You combine 2 options and you get a perp. Little cool fact there for some new people. But yeah, so you're halfway there. This is the put selling part of the perp, which, as you mentioned, 1 delta exposure is very, very dangerous if you're betting wrong. So perps go all out. And in this case, someone created a put option that almost had 1 delta exposure. It was probably at like 90, 0.9 delta exposure at the time the position was open. So they were obviously betting for the price to go up. This is an LP position between the price range of 3,882 and 4,934. So they're quite bullish on the ETH price going up to the 4,000s, the high 4,000s. But no, the price went down instead. And so not only is this LP position out of range, but they have full exposure to the price moving down. And they're at a $1,900 loss, netting 20% losses at the moment.
Damn, that's unfortunate. Yeah, I think definitely looking at the deltas has helped me not make any riskier decisions. And so yeah, if it's like at 80 or maybe even like 70 or above, you gotta make sure you're really, really sure about your predictions there.
Yeah, and just to clarify, this says 1 here, but we mean 100. Options are typically priced in contracts where there's 100 shares of the underlying. It doesn't work that way in Panoptic. You can trade 1 share of ETH. You could trade 0.01 shares of ETH. And so we put this delta figure as a number between 0 and 1. And so, yeah, if things are above 0.9, 0.8, you're putting more eggs in your basket. You're betting with more at stake, basically. All right. Well, you're 0.5 for 2. So let's move on and see if you can do better with the base chain trade. So we're going to look at the best and worst trades. What do you want to look at first, best or worst?
We can start with the best trade again. Maybe like a short call or something like that.
Cool. And what's your intuition of why a short call might be doing well?
I just think that given that people are quite gambling, like to gamble still, and usually we don't see any strangles, I'm just curious to see if there is in fact like a bearish strategy that somebody recently made. Although, I mean, people were quite bullish, so I don't know. We'll see.
Okay. Selling a call is a bearish strategy. And ta-da, you're half right again. So you keep getting half credit. This is another straddle, which means they have sold a call and sold a put. It's a delta neutral LP position, similar to the one we saw on Ethereum mainnet doing well. So the option sellers are indeed outperforming the market. This user is on base, so the position's a little bit smaller. But once again, they're actually doing really, really well at managing their position. It's much more delta neutral than that Ethereum one. As you can see, the delta here, um, they kind of net out to be almost like, so basically, if you want to know the delta, you can add up these two deltas because they're the same size of positions. So you have a positive 0.282 delta from this put, and you have a negative 0.298 delta as far as ETH contracts go in this call. So you add those up, you have basically a negative 0.004 delta, which is nearly zero. It's 0.004 ETH, which at the current price of ETH, which is 36.25, you basically have exposure to $14.50. So for all intents and purposes, this position is still delta neutral. It's basically completely hedged. If the price were to move 1% up or 1% down, it almost absorbs all those losses, really. And that's the nice thing. The price has to move like 10, a lot more. Let's say let's see, right now we're at 3,600. If the price moved to like 3,500 or 3,700, that's where you'd start to see the delta changing to be more than zero or less than zero. And that's where you start taking on more losses. But even with the price fluctuating 5% in the last day, like this position has earned $55 in Streamia, and it has only taken on $8 in losses. So it's netting $47 for a 7% return in just under a week. So what are your
Nice.
thoughts here?
I like to see people trading weekly options as well, which is very fun. So this is great to see. I'm very happy that option sellers and delta neutral positions are doing good this month. I always feel like I'm maybe missing out a little bit, but seems like this week maybe I shouldn't have been as bullish because I'm usually more delta neutral, but that's okay. I'm happy for them.
Sweet. Yes. Hard to be happy when we're losing, but good job. Good job, user zero. Oh wait, no. We'll keep this user confidential, but if you're an on-chain sleuth, you can go find them. Good job on this straddle. Yeah, very, very nice harvesting the premium and actually staying delta neutral. So let's jump to the worst trade. So we're currently 1 for 3 because you got half points on 2 of these guesses. So for the last position, what do you think is the worst trade on base?
Maybe it's gonna be a short put.
Short put. Care to give some reasoning for your guess?
Well, it seemed to have been the one on Ethereum, and so yeah, maybe it's the same since the price and the token they're trading is still ETH. So, not sure if the chain kind of like influences people's strategies more or like their decision making necessarily. I think it's just kind of probably less the bit smaller positions and kind of for lower gas fees, right? So
Yeah, makes sense. So we see same market, just 2 different chains. Makes sense. Maybe the same trade is the worst. Let's jump in. Take a look how you did. And once again, you are half right. There is a short put here. So someone sold a put, but they also bought a put, unlike the worst trade on Ethereum. So this is a 1.5 out of 4. So congratulations on your score here for playing. But let's take a look quickly at this put spread. So it's pretty similar, I think, to the position that Intern had up, actually. They bought a put, they sold a put. The put that they sold is really to collect premium. It's to offset the costs of this put that you buy. Unfortunately for them, this put that they sold is out of range and not earning them any premium, while this put that they bought is still barely in range and paying over 43% more than the Uniswap fees. And so the good thing about this put spread is that if the price were to fall any further, their losses are basically capped, right? They can't really lose much more than $233, besides the amount of swap fees that they're gonna, LP fees that they're gonna owe for borrowing this LP position. But for the most part, their losses are nearly capped to about $230, plus a little bit of Streamia. So that's the benefit of this trade. It's really hit their kind of max loss point pretty much. It can only hopefully get better from here if it goes back in range. There is this slight gap where they are paying premia and not earning between 36.12 and 37.91. So this is kind of the danger zone where they might lose a little bit more. But if it falls down, if the price goes down, they're not going to lose any more. If the price stays nearby, they might accrue a little bit of premium that they owe and lose a bit more. But if the price were to go back up above 3,800, we can see them actually potentially taking on a gain. So I think this put spread has actually behaved exactly how it was supposed to be. It's just that they were hoping the price would go up, and it did not, unfortunately.
Yeah, I think, and it's sad that the one that would be earning fees is out of range, and the only one that's in range is the one where you have to pay fees. But at least it was definitely like the capped loss, and so they were ready to kind of lose this much. Worst case scenario. So yeah, it's not the end of the world, right?
Yeah, I would think someone who set up a risk-defined strategy probably knows that if the price does move in the wrong way, they have that kind of stop loss. It's not even a stop loss because the position stays open, but it's better than a stop loss. It's like you can't lose more after the price keeps going down. So even though this position is bad, I think it was still it made sense at the time, and so no criticism there for this anonymous user. So congratulations, 1.5 out of 4. That is, if I do math correctly, 37.5% score. Not bad. Better luck on a following segment of best and worst trades of the week. Rosalie, do you have any advice for the Panoptimist going forward into the weekend before we come back on Monday to cover the start losing, stop losing, and start trading options episode?
No, I think it's just it's important to kind of just practice makes perfect, and getting used to our interface takes some time. So we're definitely very happy that people are having fun trading. Some people have to lose money while others make money. That's just kind of the way the world works. So I think just don't put all your eggs in one basket. Try to manage your risks, hedge, and you never know, right? These trades, we're not looking at these people's whole portfolios. So there could be some trades that they are winning and some trades that they are losing. It's important to kind of keep in mind your long-term goals and your whole portfolio. So
wise words of advice from Rosalie as we
not financial advice.
Not financial. So hopefully it was entertaining. Congratulations on your guessing game. Very, very good at guessing halfway. We'll see what happens next week when we do this episode every Friday. Thanks for tuning in. You might see some squishies in the background here that appear on the ether between all these blocks.
They're very cute, yeah.
Welcome, welcome to Options, best and worst trades. Thanks for tuning in, and we'll see you all next week. Take care.